Well, here we have it, guys, right in front of our face. Welcome back to the channel. Please like and subscribe. Hit that like button and subscribe to the channel because Meta earnings is here and not what I was expecting. Not what I was expecting. I had 248 shares of Meta and the stock tanked. I was down like $30,000, and now the stock is back way over where I bought it from. Where I bought. So again, guys, it's here. Jerome Powell spoke today, and in regards to that, the big techs are up. A lot of earnings are out, and because of what Jerome Powell, I think his statement wasn't as convincing. But guess what? In September, we're expecting the first rate cut, and I think from there we should get two more rate cuts. So what does that mean for the market? It means that with these rate cuts, money are more affordable, meaning that money is more accessible. So we can go and borrow money to buy a house, to buy a car, and all of these stuff. So with earnings out, most of the company that report today beat on top and bottom, which is good for the market. And in regards to that, 10-year treasury yield fell, and also Nvidia rapid release after market. As you can see, we're up 1.83%, which is awesome for the market. Also, looking at 10-year treasury yield coming down, which is good because we're expecting the rate cut that we have been anticipating from January. So it's finally in perspective, it's finally in realization, it's finally in real life happening. So what to come tomorrow, what to expect tomorrow? So tomorrow we are expecting initial claim at 8:30 and continuous claim. So those I think gonna come in better than expected. So again, gear up for tomorrow because we might get a huge rally in this market. Just want to know, let you guys know again, be careful of your position size and only step on the gas, meaning to buy more stocks when it makes sense. Don't just go and dump your money in unless you're here for the long haul. So it doesn't matter what the market does, you're here for a while and it will make sense to you. But again, if you have any questions, guys, please let me know. But I'm asking you, please, to like and subscribe to the channel. I just want to break down a few more stocks. So yesterday afternoon, who reported? So ARM reported yesterday, and also Microsoft, Mr. Softy. And market tanked, as you can see, pull on all the way down. And today, because of the better than expected semiconductor news, we pushed up, we got rejected, but after hours, we're still climbing. Why? Because Meta report better than expected earnings. Boy, I'm glad for that because now I can see my future. It's bright in the market again. So if you guys want me to break anything else down, please let me know. But I'm asking you guys to please like and subscribe to the channel because I do this channel for all my newbies and I'm trying to help and reach at least one person how to better trade in the market and how to better manage their money. But for now, I think the market is at a buying point. Why? Because most of the stock are recovering. Again, I want to break something down to you. Meta beat, which is good. I'm happy to see that. But if Meta did not beat, my plan was to buy the dip as it sell off. Why? Because what Meta did previously, Microsoft did yesterday. Yesterday and occurring today. So Microsoft reported earnings, and Microsoft, let me just share this with you guys so you can see. Let me go over here. All right, Mr. Softy's coming up. There he is. So what happened yesterday? Microsoft missed earnings, pull on back, was trading at $422 after market. Once earnings hit, the stock came all the way down to, what is this, 400? No, did not come to 410. It came all the way down to 388. 388 is where Microsoft dipped all the way down to yesterday. And with a speedy recovery, it's traded now at $418 a share. Just to show you, sometimes if it's a good company, you don't want to liquidate your shares, even though the stock missed earnings. You want to hold on to those shares because chances are, and high chances are, 1 week to 2 week the stock is going to recover. And once those stock recover, what does that mean for you? It means that you're not losing any money. And I just want to bring to your attention something that I have learned as well. In regards to the stock market, buying and selling stocks, it's better if you don't use leverage. Why? Because if your leverage is under pressure, I can tell you that what your brokerage is going to do is to liquidate your stocks and keep their money safe, which is the best thing to do. And I will take the same route too. So try to use your cash in buying any stock whatsoever. Leave your leverage for when you're professionally ready and you want to do some day trading. That's where I would say to use your leverage. But as you can see, Nasdaq rally, big, huge rally. We're all happy for this because, boy, the sell off was bringing a heartache to most of us and we couldn't deal with it. But now it's more manageable. Why? Because we stay the course and we wait for things to get better. This is the time you want to gear up to buy in the market, because I'm telling you, from here, I think this is the lowest we're going to see the market, even though I've never expected this for this year. Things can change, but once the rate cuts start to price in, guys, we're going to take off again. And this is where the money is going to be made. Look at this. Previously, we were trading all the way down. This is the future at 18,696, which is NASDAQ. And we push on up. We're trading above our moving exponential line, which is great. So from here, I'm not surprised if next week we're trading above 20,000 again in NASDAQ future. So again, this is the time you want to set up yourself for greatness. This is the time you want to set up yourself for better investment. All right, guys. So please stay tuned, like, subscribe, and let me know if there's anything I can help you guys with, because I'm here to help. Okay. Until then, thanks. Stay green in the market.